On the macroeconomic front, the biggest news item of the week is likely to be the latest monetary policy statement from the Bank of England on Thursday the 10th of May. Governor Mark Carney, once dubbed the unreliable boyfriend by the MP Pat McFadden, appears to be confusing the markets once again. Just as investors have prepared themselves for a second interest rate increase in 6 months, after nothing barring a post-Brexit cut over 9 years, Mr Carney appears to be vacillating, and an increase from 0.5 to 0.75% is no longer seen as a certainty, especially as inflation is cooling, as we can see here from the consumer, CPI and retail RPI price indices. In addition, the preliminary growth figure for Q1 in the UK was very tepid, rising just 0.1% quarter on quarter and 1.2% year on year, as shown here. That said, the Bank of England's got one mandate, inflation, and that at 2.6% still stands above the 2% target. And since the old lady of Threadneedle Street is supposed to set interest rates according to inflation expectations 2 to 3 years hence, I can't help but think it would be a bit of a blow to the credibility of the bank, Mr Carney and the pound if rates were left unchanged thanks to a backward-looking, likely to be revised GDP number. But what do I know? I didn't think the bank would raise rates last November, as we can see here, and I was completely wrong. Company-wise, just under a fifth of the FTSE 100's members are due to publish results, a trading statement, or host an annual general meeting in the week ahead. Likely highlights include first half results from tobacco giant Imperial Brands on Wednesday the 9th, full year figures from BT, and trading statements from house builder Barratt, retailer Next and grocer Morrison's on the 10th. Also watch out for a trading statement from FTSE 250 members bookmaker William Hill on the 8th, doorstep lender Provident Financial on the 9th, and real estate investment trust Derwent London on Thursday the 10th. But for me, the biggest potential source of a fuss will be commercial broadcaster ITV when it publishes its first quarter trading update on Thursday the 10th of May. As we can see here, ITV shares took a drubbing in late February and early March after the company's full year results, which represented Dame Caroline McCall's first public pronouncement as chief executive after her move over from EasyJet and her predecessor Adam Crozier's departure for the role of chairman at Whitbread. The absence of a special dividend for the first time since 2011, the appearance of further exceptional costs, and an increase in the programming budget all weighed on ITV's shares after Dame Caroline's debut, and the shares now trade at their lowest level since late 2013. The first quarter numbers will therefore be an interesting test. ITV only publishes sales figures at the first quarter stage though, and spotting a trend isn't entirely easy as ITV's made several acquisitions in the past few years, notably broadcaster UTV's television assets and the content production businesses Talpa, Big Talk, Left Field and Mammoth Screen, the creators of shows including The Voice, Poldark and Victoria between them. We can see how total revenues at ITV slowed right down after the EU referendum vote, that's the black line here, as advertising revenues in particular took a hit. That's the red line. The production business, which sells and licenses programs around, which makes, sells and licenses programs around the world, well, that's in grey, and it's actually held up pretty well throughout. And in late 2017, the good news was advertising and total group sales returned to growth. In some ways, that made the share price tumble after the full year figures a bit surprising. ITV's forecast a 1% increase in advertising revenues for the first quarter of 2018, and then further growth in the second quarter, helped by its coverage of the FIFA World Cup that kicks off in Russia on the 14th of June. The only other guidance ITV's really given for this year regards its net programming budget, NPB. Dame Caroline's planning an increase from £1.025 billion in 2017 to £1.06 billion this year and £1.1 billion in 2019. Now that will definitely weigh on near-term profits, but to me it makes sense in the long term, given the company's strategy is to build up its library of home-produced content, sell that, and reduce its dependence upon advertising. The development of Victoria, Poldark, The Voice, Endeavour and other programmes has so far broadened the broadcaster's revenue base and cushioned the blow of lower advertising income from summer 2016 onwards. After the Q1s, it will be all eyes on July's interims, when Dame Caroline will also release the findings of what she's calling her strategy refresh. Thank you for watching, and I look forward to seeing you next time.